Welcome to the AACFB's 2021 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB and I'll be your host. Our presenter today is Raul Esqueda from First Commercial Credit. First Commercial Credit is both a funding source member and a gold sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I introduce First Commercial Credit, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they should be answered by the end of the webinar. If you would like to answer your question in person, you can raise your hand and I'll unmute you to speak. Please keep any side chats in the actual chat box so that we can keep the questions separate from that. The entire webinar should take no more than 30 to 45 minutes. For those of you who would like to review this webinar at a later date, it will be posted on the 2021 Meet the Funder page of the website and will be emailed to the AACFB membership. At this time, I would like to turn it over to Raul. It's all yours.
Thank you, Monica. Thank you for allowing us to give this presentation to your members and non-members too. I understand there's non-members invited to this too. We've been a proud sponsor, a gold sponsor actually, of the AACFB. We attended our first conference in 2019, and we had a really nice time. We met a lot of good quality professional equipment lease brokers and financial consultants, and I'm really excited to continue supporting the AACFB. They've done a wonderful job. And we had a Bloody Mary bar actually in 2019. And we will be exhibiting again in the 2021 annual conference, and we will also have a Bloody Mary bar. So if you do attend, please make sure you visit us and take advantage of the Bloody Marys that will be available there in September in Nashville, Tennessee. I wanted to start out with, here we go. Main topics that I'm going to be talking about is closing more deals in the factoring industry. One of the things that I picked up from the equipment lease brokers is a lot of them don't understand exactly what a factoring prospect looks like, or what is the kind of questions that they should be asking, or you know, they really don't understand what factoring is and they want more information. So we have provided a lot of educational information for our brokers. We have all kinds of financial consultants that send us prospects for funding. But I'm going to cover this in this small size webinar, and I kept it short. It's very important for you to know and how to identify a factoring prospect. And I'm going to go through these a little bit at a time. You need to understand what the invoice factoring parameters are. And pretty much all the factoring companies have a very similar parameters on what's required for funding a factoring transaction. What makes a successful transaction, right? What are the most popular industries? This is a question I get a lot from brokers, is what industries do you recommend that I go call on so I don't waste my time in going after industries that don't fund? And that's a very, very good start. I'm going to also cover some alternative financial instruments that we have for our existing clients that helps the retention. And then I'm going to cover of how a broker makes money in the factoring industry and give you some broker tips. And then I'm going to give you an introduction to our broker portal. It's called myfactoringagency.com. And we designed that portal for brokers to private label their company with our marketing material. So none of our name is mentioned in any of the website that's created for the broker. And then it also creates brochures with your name on it. And I'll give you a little sample of that, but that's a pretty cool way to start. If you don't know, you know, instead of hiring a web person to create like the factoring material that you need to go present to clients, we've already done that for you. The funding group, the First Commercial Credit Funding Group is comprised of 4 funding companies and 1 digital and invoicing software company that we developed for our clients. Up here on the left side, that's in the 2019 conference, and that's me and my wife. We were exhibiting there. I had a really good time, met a lot of good people, and can't wait to see them again in Tennessee. You know, I remember one of the things that I always have mentioned is that you always, as a financial consultant or broker, you always want to meet new lenders. You always want to keep that new flow of funders for your portfolio, because the funding sources that you're using today may not be here tomorrow. And in this 2019 conference, I had the opportunity to make a 5-minute speech right before lunch, and I mentioned that. And then right after this, a few months later, we get COVID. And it's ironic because the two funding sources that were next to me had to stop funding for a while until they were able to get their funding sources back in and all. So you just never know. That's why you always want to attend conventions like this. There's nothing like meeting face to face with lenders. And I highly recommend that you always keep up with your funding source list. All right, so what makes First Commercial Credit different? We are an invoice factoring company. That's our core business. That's what everything revolves around. We do offer alternative funding for our clients only. And part of this is going to be some purchase order finance. We run into that. We do trade payable financing for them. We do payroll financing, production finance, sometimes short-term loans. We do have the invoicing and accounting software that prepares the funding for them. We offer fuel cards and fuel credit lines for trucking companies. We offer DIP financing. We participate in mergers and acquisitions. Ultimately, the goal is customer retention and growth. It costs so much money and effort to bring in a client and onboard them that you want to make sure that they're happy, that they're growing, and you have good customer retention. Ultimately, that's the goal. So we have a lot of experience in closing factoring deals. I've been in business. Well, actually, First Commercial Credit has been in business now for 19 years. We will be celebrating our 20-year anniversary next May. And during that time, from the beginning, we've funded over $5 billion in invoice factoring, and that's a lot. It's a lot. We've funded over 3,400 clients, and most of them average between that 20,000 to $500,000 range. But we just recently moved our availability to up to 10 million a month for clients in that size. We are non-bank owned, and what this means is flexibility. And what I mean by that is, in the last 3 to 4 years, there's been a lot of consolidation with banks going out and buying factoring companies. And one of the things about factoring companies is that we're very non-traditional. We make decisions based on the receivables, the quality of the account debtors. We don't look at credit scores from the owners, whereas the banks, they're more strict on the kind of applicants that are coming in. And so what we found is these factoring companies that were bought out by banks are slowly getting more bank lending criteria type of parameters that I'm looking at. And so we are non-bank owned. We are a private company. We do have lines of credit with banks, but we're not bank owned. And our average assets and receivables averages about 40 million. And it hasn't really moved, because of the COVID the last year. This is probably the first year that we didn't have any growth. We just kind of stayed flat from last year to now. But I'm starting to see more activity as the economy is opening up. We're starting to see a lot more lead flow, and our current customer base is starting to grow. And we lend more than the bank. This is a slogan that I had from the beginning, and I even registered the trademark because we do lend more than a bank. We do a lot of things that banks cannot do because we're private and we use our own money in some cases. So we're able to maneuver around a bank-owned factoring company. And when I came into the business, I came in as a broker. I started out as a broker 20 years ago. And I figured out how to be successful as a broker in closing factoring deals. And I'm going to give you a very simple formula for success. And I hope you take this down. You want to identify an industry that converts easily into factoring clients. Okay? In case you didn't get that, here's a formula for success. Identify an industry that converts easily into factoring clients. If you can do this and find this, the lead flow will just start coming, because you're going to be concentrating in your efforts in a customer base that is going to be contacting you soon. It takes a while. But once you get going, this will start flowing. Okay. We simplified the proposal and the application process to make it easy for clients to apply. We don't even require financials up to $350,000. And this goes for the mainstream industries, like not the construction deals, the manufacturers, service providers, things like that. Those are the majority of our clients. The majority are under 350,000 in need. Excuse me. And so this is a big pool of customers right here. We don't have setup fees. We don't have upfront fees. I remember I started as a factoring broker. This was a big obstacle. Factoring companies wanted my client to send $750 just for them to look at the application and see if they could get set up. So we don't have that. And then funding. Some factoring companies want to take forever to fund. Most clients, I think their need by the time they come to a factoring company is because they need to make payroll probably by next week. So this is very important that you work with factoring companies that move fast. I realized that a lot of factoring companies were making it too complicated to apply for factoring. They want to treat the client almost like a bank application. So what are the factoring requirements? As far as for first commercial credit, we're looking for clients that have recurring business with the same accounts. I mean, of course, they're gonna always put new accounts in, but you don't want to do or go after clients that have a spot factoring need. Okay, and that's fine if you can find a factoring company that likes spot factoring deals, the one-time need. The problem that I found is it's not good for the customer for a payment assignment to be placed to a factoring company if all they're going to do is just one invoice. There's a lot of due diligence fees and underwriting processes that go in onboarding a client. And for them to just finance one invoice is just not feasible. That's what I found anyway. So what we're looking for, even if it's only one client, as long as they have recurring business with that same customer, I'm more than willing to onboard it. And then we accept net 30-day terms, net 60 days, and 90-day terms. Any one of these is fine. Anything past 90 days, unless it's a Halliburton or a Lowe's. Recently, our clients that were doing net 60 to Lowe's got a letter one day. Now they had to do net 120, and that's fine. We'll do that. But it's very, very rare to find a account that are selling or customers that are selling at 120. We're okay with low credit scores from the owners. That's fine with us. Startups are also okay, but here's the difference between a definition of a startup to me is you have a company that's finally got a checking account under business name. Okay, they got some clients that they just signed up with. They got maybe materials that are going to get shipped. That's a startup to me. They don't have their first invoice. They're about to invoice, within the next week. That's fine with me. There's some startups that are way too early in the startup stage, where maybe they just registered their business name. They haven't opened up a bank account. They don't have insurance. They don't have customers. They don't have employees. They don't have inventory. It's just way too early to onboard them. So we fund invoices. That's the asset that we fund. Okay, and the clients have to have some accounts receivable to fund. You know, I get a lot of calls and a lot of inquiries for factoring contracts or pre-billing. And the problem with that is that's really not factoring. That's more like monetizing contract financing or contract financing. An invoice is usually an asset that, or at least we consider it as an asset once the client has received the services or the product, has acknowledged that the invoice is a payable. At that instant, that invoice becomes an asset that our client can finance. Until then, it's just a piece of paper. You know, it's still not fundable. And so anyway, I get a lot of confusion. There's a lot of confusion out there that you'll get maybe a client that gets a contract that's for $1 million from the government, and they want to factor that contract. I don't know of anybody that does it. Maybe they might get a loan or a partial loan against it somewhere. But in invoice factoring, you actually need the contract's just a part of the deal. The customer has to go and perform that contract to a certain phase, maybe. And then at that point, the customer will accept the invoice that for the completed service or product that's been delivered up to that point. And then you can factor that invoice, okay? But I don't know of anybody really doing the contract financing at this time or pre-billing. So what are the industries that we fund? Anything, I think we're one of the few companies that has the ability to fund just about every industry with the exception of medical insurance. The general mainstream industries that we refer to is usually service providers that are temp staffing. We do a lot of temp staffing firms. We finance a lot of those, and information technology firms, cybersecurity, all of these companies, they bill by the hour. And usually by the end of the week, they get some kind of authorization based on the hours that were worked for the previous week. And then they generate their invoice. Sometimes they'll invoice every other week, and then some are only allowed to invoice once a month. And for those really become a cash flow crunch for them because they're having to make payroll during the course of the month. And then they still have to create an invoice at net 45 or net 30. And that just pushes out their cash flow way too short. A lot of security guard companies we've been doing lately, cleaning companies, janitorial cleaning companies, suppliers that supply cleaning supplies. Trucking and transportation has always been there. It's always consistent. We do a lot of trucking, but we prefer to do normally 2 truck operations, truck operators that have at least 20,000 a month. Anything under that really we just really don't make a lot of money. The fees are very low in the trucking industry. It's very commoditized. So we had to increase our minimum in order to still make money or be profitable in bringing those in. We do a lot of limousines, believe it or not, limousine services, private bus companies, taxis, and recently we funded some tugboats. This area here, I think for equipment lease brokers, I think you'll find probably more prospects in the manufacturing, fabrication, distributors, recyclers, maybe some importers. These are all, they make really good factoring prospects. And then government receivables, federal, state, municipal. Sometimes we have prison suppliers. Lately, it was the PPE products selling to state and municipalities, federal government. And here's another one that a lot of factors do not do is agriculture related receivables or PACA related receivables. We do have a minimum requirement because we want to make sure that they have ongoing receivable need. And we also monitor the payables to make sure they're paying the growers in order for them to continue factoring with us. And again, these are probably going to be, oops, went too far. These industries for equipment lease brokers are probably what they run into the most. I mentioned earlier. Flexible underwriting parameters is very important too. You know, when you have a factor that does not require financials or application fees, that's a big obstacle to overcome. We take care of the obvious obstacles at the beginning of the funding process. So if I see that there's a lien or MCA lender that's already got a lien on the receivables, we start working early on to see if we're going to be able to get it subordinated, or do I need to pay it off in order to get my first lien position on the receivables. Sometimes we may have IRS liens. And then continuous follow-up, that keeps the deal moving. And in some cases, you know, we do have a line of credit with our bank, but sometimes we may have to use our own money to get the deal funded. And then later on, once we clear out the liens, perhaps IRS liens, perhaps an MCA lien, perhaps a SBA PPP loan lien, you know, we know those will be released, but the bank will not give us eligibility. So we have to use our own funds. If necessary, we'll go ahead and use it. And then, of course, we could approve up to 120-day terms on quality account debtors. Low credit scores accepted. So that's, you know, when you're working with a factoring company, you need to make sure that they have a flexible underwriting process. When I started as a broker, we revolutionized it. I think we revolutionized the way we onboard clients and the way we would process the application. You know, don't try to reinvent the wheel. You know, we already know how to close deals very efficiently. And one of the problems that I run into a lot is the broker wants to get in between the lender and the client. You know, like, I want to talk to the client, and the broker doesn't want me to talk to the client. He'll pass whatever information I have on to the client. That doesn't work. That's going to be slowing down the process way too much. And I'm not able to really vet the client the way I need to ask all the right questions at the right time. And also the client has a lot of concerns, has a lot of questions that probably they won't think about when you have a broker in between the lender and the client. Maybe in other industries, maybe in the equipment lease, this is normal. But if you're going to do factoring deals, the best thing to do is gather the most information you can at the beginning, and then give it to the lender and let the lender handle the follow-up with the client. We provide when you sign up with us, we give you a pre-qualification app to use, and it has all the criteria, the questions that you should be asking about the client. It's really in factoring, it's more important to know about the accounts that our client is selling to. What is the kind of backup they're using? How much receivables they have? What industry are they in? Those are the probably more important pre-qualification items that a factoring company would prefer than a social security and a name and some kind of a business summary. What I ask of brokers is get the accounts receivable aging. Try to get the accounts receivable aging, get the pre-qualification app, and then let us do the rest. That's the best, what I could recommend a broker to do. We issue a term sheet within 15 minutes after speaking with a prospect. Sometimes I'll issue the term sheet as I'm speaking with a client. That's how fast we can move. All of our proposals are online. So when the client gets it, he can get it on his cell phone. I've had clients actually sign a proposal and fill out an application with their cell phone. And technology matters, especially with these younger people. I mean, they love gadgets. And so we went completely 100% online for all of our documents, application process, and proposals. It's all about timing. You know, it's most factoring deals need to close fast. By the time they call us is because they're in a very dangerous situation where they might miss payroll, or they haven't been able to pay the suppliers and they can't get materials, things like that. That's how serious it is when you get a phone call like that. So they need to cure the crisis right now. And if you have a factor that takes too long, you know, you're gonna miss that opportunity to close the deal. Most of the, you know, my experience with when I was dealing with other factoring companies in closing deals is that they were too slow to respond to the prospect. You know, I would send them a lead and they would take 2-3 days to give them a call. Well, that's too low. You know, nowadays we're closing the deal in 3 or 4 or 5 days, you know. It's too long to send out a term sheet. You know, they call the prospect, well, send us this, send us that, send us this sheet too. And the term sheet would never go out. And, you know, well, a lot of clients, they want to know what it's going to cost. They want to know the terms. What's it going to be? You know, okay, they send all the stuff in and then a week later, they still haven't got their term sheet. And that turns off a lot of prospects. And then once they get their term sheet, sometimes they get a due deal fee to send, like $750 or $2,500. And then after that, then they have to do a non-site visit on a very large deal. So this here, it just slows down, in my opinion, the deals. We don't do any of this here. We go off of everything is what we can find about the client online, and go off of that. The other thing that I realized that a lot of factors lose deals on is you got underwriters sometimes that don't know exactly or understand the industry. And then, or too many people are making the credit and approval decision. It's kind of like, you know, the kitchen with too many chefs in the kitchen. That's what happens with some of these factoring companies. They got too many people back there making decisions. And then they start asking for unnecessary documents that have nothing to do with the deal. And so anyway, that's another reason factoring companies sometimes don't close deals. Sometimes they get too comfortable and they start getting really picky on the deals they want to bring in. And you need to be able to identify this if you're sending deals to a factoring company and they're always finding just, you know, a perfectly good factorable deal that just never funds. And I ran into that when I was a broker. So what makes a successful factoring transaction? What are the ingredients, right? So the main thing, these are main things for all of these here, but you need financially strong, credit-worthy buyers. We refer to them as the account debtors, okay? The buyers are the account debtors. That's the people, those are the companies that our client are billing. If the customers are not credit-worthy, the deal's dead, okay? There's no way this is gonna get approved if you don't have strong credit-worthy buyers. Second thing is we look at the invoices with the backup. So whatever the buyer is requesting with the invoice, that's what the customer has to have, right? So if he has to submit the invoice with a purchase order and a proof of delivery, well, what's the proof of delivery? Is it going to be just a bill of lading that it shipped, or does the customer want the bill of lading to say that it was delivered and they want a signature for delivered? So all this comes into play. An executed master service agreement, it spells the terms of the agreement, the terms of the service, excuse me, and the rates. And then we check to make sure that our client is free and clear of any liens. And then we may have to get subordinations if needed. Lately we've been getting a lot of subordinations from banks, which was very rare 2-3 years ago. And once we get an acknowledgement from the buyer of our notice of assignment, what the notice of assignment means is that it's where the buyer acknowledges that there's a factoring company that has been assigned with the payments, and that they acknowledge that and they will start remitting payment to us. And then hopefully they have an easy process to verify the invoices with the buyers. Sometimes lately, we've been running into more customers, or actually buyers that have portal access where we can log in and just see the status of the invoices, what's been approved, what's still pending. And what are the typical obstacles that we run into in a factoring transaction? Sometimes I'll get a prospect in and we look and he's got a lot of liens, you know, MCA loans. Sometimes there's more than one. Sometimes there's 3 MCA loans, and then they got an IRS lien, and then they got judgments and stuff like that. All these are going to be obstacles in moving forward with a client that need to be taken care of before funding. Sometimes we run into buyers that don't want to participate in verifying the invoices or paying the factoring company. So that's also going to be an obstacle for funding. Sometimes we have buyers that have poor credit or insufficient reporting. Sometimes it's not that they don't have credit, they just don't have any credit, no trade history. So that becomes a problem. And then sometimes the master service agreement contains too many offset rights. What that means is the customer can return all the product and just deduct it from the invoice that we funded, you know, so that could be a problem. Pay when pay clause. We've been running more into a pay when pay clause when there's a prime contractor that's waiting to get paid. And normally we see this more in the construction industry. And lately we've been seeing it more in the staffing industry where there's a middle, you know, where our client is a sub of a prime. We do accept the pay when pay clause so long as there's a strong debtor in play. And then some clients are just too disorganized. You know, they have an invoice and they don't have the proof of delivery. They don't have the purchase order. And so these deals are very, very difficult to close because we can't get the client to just submit what their customer is asking for. And once we receive that, then we start funding the invoices as we verify them. The obstacle of sometimes we get a client and we find out that they just want to factor one invoice, or sometimes they don't have enough recurring business. Sometimes they just want to, they have a business model that's always trying to find a new customer. They sell to that one customer one time. Those are very difficult to onboard. Or sometimes they just have too low of sales volume where they don't meet our minimum to where we're profitable. The other thing that we discovered is that once we were factoring our clients, they would come to us for additional cash flow needs. And especially if they're in growth mode, they would need more capital to, for example, their supplier credit lines were capped out and they needed more money to pay suppliers to continue the supply chain. And where I recognize this niche that we have is that a lot of factoring companies will not over advance or give loans or provide PO financing in their own umbrella under in-house. So we offer the purchase order funding, some small cash advances when needed, short-term loans, and trade payable finance. And we got you covered. You know, these are all the companies that we form because each one does specific funding for different industries. So our capital credit, that has more aggressive underwriting for more challenging clients. It has, you know, we could take on startups with this. General industries mainly, no construction, no agriculture. Okay, and then we have our commerce commercial credit line. This one is for far larger clients. It's got we can offer more competitive rates, but the deal has to be very large and they're very strict. The bank's very strict on the underwriting parameters for this company. And then we have contract credit. That's our newest company, and this is a company that we're authorized to buy PACA-related receivables, construction receivables, and some government receivables. And then we have payables credit. This is where this is the company that does all the payroll funding, purchase order, trade payable financing, inventory financing, all the special cash flow, alternative cash flow products is offered through the payables credit line. So pretty much, I don't know of any factoring company that has the ability to fund all of these industries and all of these products, but we were able to get it done. And so a lot of people have said, well, where do you get your referrals from? And we do a lot of online marketing. We have a banker program. We have, believe it or not, lately, other factoring companies have been referring clients to us, and we do pay commission to these factoring companies. Of course, brokers and even our existing clients are referring customers to us, financial consultants, turnaround industry, merger and acquisition consultants. All of these are good referrals. And then here's some broker tips. I would recommend that you're more precise in the industries you call on, and it saves so much time for you and marketing efforts. You're going to save money on marketing efforts and resources. And in order for a broker and a referral, in order for a broker and a factoring company to make money, we need to have clients that stick around for at least a year, because it takes us about 4 to 6 months just to break even. And preferably, 3 years is pretty good. If we could retain clients for 3 years, a broker will make residual income every month. So that's how you want to make sure you go after industries and clients that factor every week or at least every other week for a good year to 3 years. And again, concentrate on industries that have a high conversion rate and simple invoicing process, simple proof of delivery. These are the best industries that work and convert. And again, avoid the one-time funding request. Construction industry, the problem with construction that I see on the inquiries that I get is they're only needing funding like for that last invoice, and they don't want to use you anymore. So we do offer the construction factoring, but it has to be a construction company that's going to use us on an ongoing basis with multiple projects that they got going on. So how did I get started? Back in 2000, I attended a Larry Pino cash flow seminar, and I was introduced to the factoring industry. And once I found out how you make income, I kind of liked the idea of residual income. And I am still making, from 2000, I still have clients. I'm still making commission from 2000 from clients that I closed back then, still today. So it's not a lot of money that you get paid, but you get a little bit of money every month. And then as you start closing more and more and more clients, it starts adding up and it becomes a very nice steady cash flow for you. We're one of the few factoring companies that offer a closing bonus. And I have a little chart here. This is in your, it's going to be in your broker package when you sign up on myfactoringagency.com. This is our bonus payout. This is based on the initial funding only, okay? And so we pay, in addition to the commission, the ongoing commission for the life of the account, we pay a closing bonus. And I noticed a lot of brokers were doing MCA loans, referring out to MCA lenders. And I know a lot of equipment. I ran into some equipment lease brokers there at the show that were actually, that's all they knew really was, equipment leasing and MCA lenders. And it's really easy, to just get a 2-page application and gather 6 months worth of bank statements, send it to 3 or 4 lenders and see who gets the deal. And the problem with MCA prospects or loans, I don't have a problem with the loans, they're fine, but not all prospects should be under an MCA loan product, in my opinion. Some of them don't even qualify. For example, so if they have uneven sales patterns in their deposits, they don't qualify. If they're less than 3 months in business, they don't qualify. If the credit scores are really bad, they usually kill the deal. The industries, they start limiting a lot of the industries, and the amount that is approved is usually based on previous sales instead of the future. And one of the things with invoice factoring is we could qualify any of these here. We can qualify, for example, somebody that's doing 100,000 a month today and plans to do $1 million a month next month. We can fund that. There's not an MCA loan company that would do that, fund $1 million worth of business when they're only averaging 100,000 a month. Okay, so factoring has its place. MCA loans have their place. Actually, there's a lot of MCA prospects that I know of that I can't help them with factoring because they just don't qualify. So you need to know of both, and I think you need to understand what your client's needs are and see which product is going to fit them better. And here's an example of how you would make commission in a factoring transaction. First of all, let's just say you do $1 million in 1 month for a client that does $1 million, or a combination of clients. Let's just say does $1 million, and our average fee is 2%, and it turns every 30 days, right? So if you close $1 million deal, you're going to get $10,000 of a closing bonus, plus for the 10% commission of the 2% for the life of the deal. Okay, so here it is. It's $1 million. We would make $20,000 in fees. The commission monthly would be 10%, $2,000. Over 3 years, 36 months, you'd make $72,000 in commission plus your $10,000 bonus. Okay, so it's a little bit at a time, but this customer can be with us for 10 years and you'll still be getting. Usually what happens too is customers grow. So today they might be only doing $1 million a month, but in 4 or 5 years, they might be doing $5 million a month. So this commission will increase as your client grows. And just this January, we closed a client that was only doing like 100,000 a month, and he went to a $10 million a month, doing the USDA American something with a COVID program, some kind of assistance with a COVID program. So he was supplying dairy products, but that just goes to show you there's not an MCA that would have been able to accommodate that, and that's where factoring fits in better. All right, so myfactoringagency.com. You could go to this site and go ahead and register your company name, make sure everything's correct. And then it's going to generate your factoring agreement, your referral agreement. And then you'll also get a website with your company name on it. And it's not indexed, okay, in Google, because every agent has the same identical website, except with the difference is it has your company name on top. It also will generate brochures with your name on it and marketing material. So this is what it would look like. This is what the website looks like. So it would have your company name up here. We have one logo for everybody, but it's a website that's ready to go. You could throw the link to your client if they want more information about the services. And at the very bottom, it would have your phone number. And then they could fill out like an online application if they wanted to, and it comes directly to us. And it's your carbon copy too. This here is our invoicing and accounting software, and we added this feature to make it easier for our clients to submit invoices to us. So it does all the invoicing, a little bit of accounting. You can post payments, pay bills, and it creates the funding schedule for them. And it also keeps all the images and backup information all in one file for them to organize their files a lot easier and submit it to us and their client. So we have when you sign up and you get your referral agreement, you're going to find that it's a very broker-friendly agreement. And we don't require indemnification. I don't believe in indemnifying a lender. There's no reason why you should be indemnifying anybody if you're referring business to them. But every lender has their own right to do whatever they want with a referral agreement. I just don't think it's necessary. And I challenge you to print my referral agreement and change the name out and give it to a factoring company and see if they'll sign it. It's very broker sided. And it's very, very, for example, we continue to pay referral fees even if the client's under a default, because factoring clients, they're always in default. They're falling in and out of defaults. And honestly, I don't have time to be deducting commissions on a client that's in default. If we make fees, we pay. That's the way it should be. If I take money to the bank because of your referral, I'm paying. I don't care what the status is of that account. All right, and I think that concludes my presentation. Yes.
Great, thank you. We do have a question. It says, can you assist a company looking for capital investment for a hydropower project construction? Total cost is $400 million.
No, because it's not an invoice. Remember what I covered is that we fund invoices, and what I believe that prospect is looking for is probably monetizing some money on that contract. And I think there might be within the association, there's some lease companies that will, if it requires equipment and stuff, they might help out in monetizing that contract, but it's not our type.
And I just want to remind everyone, if you do have a question, please put that in the Q&A box and we'll get that answered for you. Or if you want to click the raise your hand button, we'll unmute you so you can ask your question verbally. I had a question. I know with the last year with COVID and everything, a lot of companies have changed criteria and things like that. Is there anything that you've changed due to COVID or changed temporarily and it'll go back to the way it was, or you pretty much stayed as you were?
I think we stayed pretty much as we were. I think the newest, we just added more products. Actually, we just added more available financial services. We added the PACA related receivables, which was new. We did have experience with, we added more food factoring, food industries. That was one thing that I realized in COVID is animals, pet feed, that doesn't stop. I mean, animals still need to continue to eat no matter if there's COVID-19 or not. So that we had really good success continuing to fund food related industries. And we're actually investing more into those industries because they proved to be very reliable during the pandemic.
Someone's asking if you do international invoices.
We do, and it depends on the country, and it depends on the amount. For example, we have a lot of clients that are domestic. They have a lot of domestic receivables, let's say, and 15% are international. And so what I've done is I just separated it and made like an international credit line that's based on their aging for those international receivables. So we're not like going overseas and making an assignment. We're just giving them availability, almost like a borrowing base. Okay. Yeah, I found that it was easier to do.
Will you do factoring for the cannabis industry?
Yes, actually, that's new. And one of the things that I found was we had a security guard company, for example, come to us, and their customer was in the cannabis industry, and they were protecting, I guess, whatever they were protecting. And our bank prohibited, this particular bank last year, wrote us a letter, and they wanted nothing to do with not even the payments coming in from industry that was in the cannabis industry. And I found that strange. I said, well, our client's a security guard company. They're perfectly legit, right? What difference does it make where the money comes from? And yeah, you're going to find that still there's some banks that do not even want to accept payments from them. And so now we have through the contract credit company, we can now have an assignment and payments coming and flowing from the cannabis industry. Now, if our client is selling cannabis, I'd have to look at the deal to see where it's going, what state it is, and so on. But yeah, we can.
Yeah, that's a very searched question on our online community. So that would
Yeah. Yeah, the same thing goes with firearms, and we did a firearms deal. We've done several, and one of them was here in Austin actually, and they were manufacturing a gun, a very, very a gun that's a very high demand. But the way that we had to factor this is, when you're factoring an invoice, you're actually purchasing the invoice and all the inventory that belongs in the description of that invoice. So we were temporarily buying those guns, right? So we owned them kind of like temporarily until the client received them. So all these guns were shipped to FedEx, and the government requires guns to be shipped under 2 days. So FedEx has to deliver those guns in a 2-day process. But everything, all the tracking, all the proof of delivery was on FedEx. And so we were funding the firearms based on that. So that was very interesting. It was a lot of, you learn every time you do a deal, you learn something new. And I learn something new every day, actually. Nothing's ever the same.
Great. Well, I don't see any other questions. So I guess that comes to the end of our time, unless you have anything else you want to go over.
No, I'm fine. I'm pretty much complete now.
Great. Since there's no more questions, we'll be ending the webinar now. I want to thank big thanks to all the participants, and especially our valued funding source member and gold sponsor, First Commercial Credit. Thanks for a great job, Raul. We invite everyone to meet with First commercial Credit in person at our annual conference coming up this September in Nashville, Tennessee. Thanks again and have a great day.
Thank you.